In my last video, I predicted just how Bitcoin would go back up to the mid $90,000 levels, and that played out exactly how I predicted. And I'm going to show you guys just how I analyzed the charts to be able to come to that conclusion. And I really did assure you guys this would happen. This would happen based on technical analysis. So I'm going to dive back into the charts, show you guys just how important technical analysis is. Not 100% right all the time, but most times it is. What's going on, everybody? My name is Israel, and you're tuning in to Invest with Izzy. I appreciate everybody for tuning in. So I'm in my car today, as always, here and there. When I don't have studio time, this is my place to do videos. Just as a reminder, this is not financial advice. This is just my own personal opinion based on the research I've done and just my opinions. And for entertainment purposes only, please consult your own financial advisor for your own decisions. All right, let's get straight into the video. First things first, guys, I really emphasized it last video. I was like, yo, the charts are showing that $73,000 ish level was the very bottom, and we're just gonna kind of go up from there based on technical based on technical analysis that I did. It was very obvious. So I'm going to go back into the charts and show you guys just how that is. Like I said, technical analysis is so important, right? Like, you can see a bunch of news, you can predict just on your feelings, this and that, but technical analysis is always so important. And it's a skill I've learned over about 6 years of investing, guys. Ladies and gentlemen, you have to know technical analysis. So without further ado, though, let's get into the charts, and I'll show you guys what I seen. All right, guys, so as you can see, I'm in TradingView right now, and just like I said in the last video, the biggest green flag I seen to invest again into Bitcoin and crypto overall is, I said like last time, look at this double bottom. You see this pattern right here that looks like a W? That is like the biggest green flag of all times. Like, if you don't think this is a green flag, you might be colorblind. If you know technical analysis, this is a big green flag. And then there was a second pattern that was a bullish pennant. So basically like this, and it was constricting like this, right? And the breakout target is, you measure that length from here to here, and then from the breakout point, you see how perfectly that ended up playing out. And then also with this double bottom W pattern, you measure from the top of the W straight to the bottom, and then you take that from here to here. Look at how perfectly that played out, guys. All right, let me go back to the face. Just look at how perfectly that played out. Very important to know TA. And just like I told you guys, it's not always going to be right, but most times it is, because what technical analysis shows you, it tells a deeper story than just what these candles are showing. All right, it's showing how there's resistance, like people are not willing to sell lower than a certain price, or the slowdown of selling or the slowdown of buying, things like that. And let's go back actually into the chart. Let me show you guys another thing. Like, this is one of the easiest things you can kind of learn. Especially for you beginners, any beginner watching out there, like, this is just like something that you should know. All right, something that's easy to understand. I'm gonna break it down like I'm talking to a kid in middle school. All right, guys. So this is what I really want to explain to you guys. Very, very simply, especially for you beginners out there who really want to get, taught like a middle schooler. I'm gonna talk to you like a middle schooler, because look, this is how I learned to just give me the basic fundamentals. Like, don't use the big words and stuff like that. That's how I learned too, guys. So one of the easiest things you can learn or understand, I'm going to give it to you right now about technical analysis. And what is that? It's just so you can understand why when things hit a bottom, they take a long time and then they explode. This is an analogy I'm going to give you guys. You see right here, guys? You see right here when it was at the bottom, right? When it's at the bottom right there, that's saying like, it dropped down a lot from 83 to 74,000, right? And it bounced, right? It tried to go back up, and then it came back to about the same point, and it bounced again. And where you see a lot of that volume, it means like a lot of people are buying, like a lot of people. And the reason why, once it breaks out of a pattern, it shoots up like this in like less than 2-3 days. You see how this big boom right here was? All right, this like 10% gainish. You see why that happens? Let me go back to the face. An analogy of why that happens is, let's say you have a Coca-Cola bottle, right? If you have a Coca-Cola bottle, when you shake it, you're shaking it. The longer you shake it, the more that cap, when you open it, is going to pop and explode. The longer you keep these charts down, right, into the bottoms, the more it's going to explode because people have been waiting a long time. That's why it explodes. But like when, for example, you're going up and then you wait, you're going up, like that momentum fades because we're just on an uptrend, right? People are getting used to the gains. No one's waiting for an explosion. But when you're at the bottom and it finally breaks out of a level that it hasn't broken out of, that's because it's been held down for so long. Kind of like a rubber band. When you pull a rubber band, the further you pull it down, the more it's going to explode up. All right, the further you pull down, the more it's going to explode up. And the tighter you have that cap on the Coke bottle, right, the more it's going to explode up. Because if it's a little bit open, loose, the moment you shake the bottle, the moment you shake it like this, it's going to start, falling out the sides a little bit. It's going to be like, but if it's fully tight, it's going to be a pop. It's going to be a pop, right? That's something you guys should know of why these things explode, all right? So, guys, as you can see, look, we exploded exactly. And guys, keep in mind, when you do technical analysis like this, like, don't be expecting for it to go to the exact dollar and the exact cents, like the way I drew it earlier, like this, like, where's that? Yeah, you see that? Like, don't expect it to be like, oh well, it has to hit 94,367 or else it doesn't work. Like, no, it's just around that price range. That's why you see it. There's some people selling here, some people selling here. So that's why it went to that point. So that's why technical analysis is just so important. So important. So important. But I want to say too, this is another prediction. All right, today is Sundal. Yeah, today is Sundal, April 27th. Sorry, no, today is Sunday, April 27th, right? And it seems we're slowing down. I personally don't believe, unless there's some crazy news or whatever, I don't think we're gonna go higher, like up to the 100K levels, really, really soon. I think this week we might cool off a little bit. And don't be surprised if we go back and retest 80, 89, 88,000-ish or $90,000. That's what typically happens when you're at a bottom and you spring out and you blast through. You tend to come back to the previous resistance slash support levels right here and bounce off of those levels. So you'll see something like this. You see that? Boom, boom. We'll bounce a little bit, go back up, boom, boom, boom. Stay in these levels, boom. Back to the 100K levels, and then boom. That's what you'll typically see. That's why charts aren't just like boom, boom, boom. Like, it's not just straight up rockets, right? Like, it's not like that. All right, it's back and forth, back and back and forth, back and forth, and then it goes on to different levels. That's even why you see, look, this is another example of what we already went through. Even in the opposite way, when you're going down, you're gonna bounce back up again. All right, just in general, a general formation. You see, we went high, we bounced low again, and you can see this level right here was kind of the previous resistance slash support levels. That's why you've seen this bounce back up again. Sorry, let me open it back up a little bit so you can see better. Let's go on the 4 hour. Come on. Okay. 1 second, guys. See, that's why. Okay, this is a mess. Alright, you see, this is kind of like the area where there was a lot of bouncing. And that's around 95? Yeah, around 94, 95. You see? So, that's why it kind of went rounded down. Went through this level, right? Through that level. And then, look at that. Retested again this level. When it bounced back up again. And then it went back down again. And then went and tested the lows. And that is a coincidence back at here when Trump was elected, and that's basically the previous high of 2024, which was like 74,000. See, it always comes back to a low previous all-time high. You see that? You see that? That's how you really understand technical analysis. I hope that made sense. I hope that's not too complicated. And that's really all I got for you guys today. I didn't really have time. I'm super busy all the time, guys. But this is humble beginnings. When I don't have studio time, I still got to get this working. I still got to record these videos. I'm in my car. Humble beginnings. That's what I believe in. I believe in working with what you got until you hit the top. That's how it is. Thank you for tuning in. Just like that, I'm gone. Peace.